Mic check. Mic's on. Welcome to the channel. This is Reliable Rudy. In this live stream, just going to do a little bit more stock market preparation for tomorrow. Happy Juneteenth. Stock market is down, but we do have the oil and some commodity markets open. So I've kind of just been looking at oil and waiting for this positive break. A little bit of an indecision candle, a little bit of a stair step. Got the previous highs around this 70, 50. We can take a look at the 15-minute chart, and I would say probably some sort of descending channel like that. We have this neckline marked, or we could probably mark it up just a little bit more. But we also have this shorter term trend line right here. So if it kind of follows this descending channel down to this range, that is kind of what we're looking to hold as support. And nothing's changed. We're looking for some sort of 75 break, which is what it has been fighting to get through. So yeah, that's just the oil chart right there. So before we go into any of this stock market preparation, you guys know I'm not a licensed financial advisor. Just sharing my opinion in this live stream. I'm not perfect, but I am going to be more focused on more profitable companies today. We got 4, 7. We had 12 companies that we're going to go over today, and all I did was use a scanner, the free version for TradingView. Went to a stock scanner, scanned for volume, and just put a little bit of a PE and a current ratio up and scanned for that, and this is how I got to these 12 companies. And also, one of the things that I did with this scan is I scanned for weakness, which normally I scanned for strength, but obviously when I scanned for strength, there was like 550 tickers in the stock market, as we all know, has been pretty strong. So I wanted to find some lagging companies that, maybe they haven't performed as well in the short term, but maybe if the market were to pull back, are these companies going to kind of balance out? So that's kind of what I was looking for. Whether there's any meaning to it or not, I'm not really sure. Uh, but sharing my opinion. Long story short, with that, I'm just sharing my opinion here, guys. So first ticker we got is actually a tech company, which is a little bit odd to say scanning for strength. So when I scan, it's off of the 20 days, and my strength is based off 50 days. So dating back to May 18th, we came out with a sticky note that said, hey, this is a nice flat top on Micron. The ticker MU is the first ticker we're going to be talking about. And I'm sure that's kind of blurry for you right there. But just marking out this kind of flat top right here, you could say this even dates back over to here. We got the gap up on this day, and this is why it was a sticky note name that day, and we were identifying 65 flat. So you gap up, it tries to retrace down to that gap, and it catches a little bit of a bid. Well, this is the price that held, got a bigger gap up, and then it also retraced back down to this range and held. And Friday's trading day also traded down and wicked towards 56, which is kind of this flat top breakout area that we've been focused with. Now, one thing I don't like about the Friday's trading day is the red engulfing through some levels. You do have positive strength, but the volume increase is also a little bit of concern. But there is a buying wick there, so that is one thing I'm focused on. And you do have an open gap here at 65.35, and we know we have the 65 support, which if I just mark these tops right here, that's at 64.65 give or take. You can play around with that. But also, I do think there is a legitimate trend line build in here in some way, shape, or form, whether it's right there or from these lows, and you just mark these bottoms. You could even get those wicks in right there. So I do think you have some trend line support meeting in with this gap. So how is it going to act in this range? So I do think Micron is a reasonable chart setup. If these previous highs can hold the support, uh, looking to the left of the chart, we have this gap that it tried to attempt to fill. So that's at 75, where I would say that is respectable. So if you're lucky enough to get this, let's say 65 flat, 15% for our first, and I do think it's possible that you could even catch a bid up to this 89 gap. If you're lucky, if I was marking some lows, you wick hold, gives it up, gaps up to it, tries to hold, rejects it a couple times. So that's up to, I'd say this is sort of a trimming window right there. So from current price, to that window, reasonable setup for that in my opinion. And to the highs, 30% for the dream move. I think it's a reasonable setup, and it's a tech name, and Nasdaq has been very strong. So especially chip names, where Micron is a chip company. I don't see a reason why it couldn't catch a bid right here. Now, obviously, my out is probably below this flat top, the wick lows, and you do have a gap to the downside right here. So I think it's possible that if it breaks this uptrend, you're going to have people that are saying, hey, I think I can short this down to 60 flat. So that's kind of what we're seeing with Micron. That is the first company on the list. The second one is Occidental Petroleum, the Warren Buffett oil play. And I wouldn't say this is one that I'm going to be super focused on Tuesday, but I have identified it as uh, I do think it has solid support at 55 every time that's gotten down into this range. We know Uncle Warren is buying Occidental Petroleum up. Is he going to continue? I do not know. But just kind of mark some of these lows right in here. Uh, if it were to get down there, I think that's a reasonable area for more of a long term. But I do think that it could be trying to build some sort of trend line. If it caught a bid, I'd be looking for it more so above Friday's high. But decent red volume that's come in on the last 4 days. Is it going to be able to hold this little trend line? I don't know. So this is why I'm saying I'm not going to be as focused on this name on Tuesday. And I would say it's probably safe to say that you have some sort of downtrend. So even if you're buying it at 60, that risk reward really is it there. This is going to be a long play. Anything that you're building, trying to buy this support down here, I think you're trying to buy it for an eventual break of this downtrend. Or maybe you can catch a bid up to the tops, 65. So get lucky enough, 55, 65, run at $10. I think that's reasonable. But fundamentally sound company, returning a lot of value to shareholders, but has the price run up too much? Does this need to, if it breaks 50s, does it pull back into like 40s or even into the 30s? I don't know. So um, that's why I try to stay up to date with crude, and I'm focused on the companies that are returning value to shareholders. The next company is Barrick Gold. Now, I'm sure my chart is a mess. Is this going to be the third point of contact? Now, obviously, weaker name, so this is why I've been kind of scanning for this weakness. But the way I see it is, just mapping out these lows right here. Is this going to be a trend line worth trying? We're kind of wicking down there, so maybe not a play for Tuesday just yet. But next week, if it got down to like a 16 flat, why do I say 16 flat? Is because you also have a gap fill right here at 1592. So if it pulls back into this next week, I think we're going to play around with it just a little bit. Now, I'm going to stay the course, as in if the price were to get down to here, this trend line is no longer really viable. But you do have an interesting gap right here, and then you also have another gap that wasn't filled right underneath of that. So kind of 3 entries if you were trying to play this for, okay, Barrick Gold, one of the more well-known gold companies. Not the most fundamentally sound financials, if I'm just being completely honest, but gold price, if we're looking at gold, I do think gold It's kind of just trying to hold support, but if gold gave up these lows right here, I would watch out with all gold companies, as in you have a left leg, you build a neckline, you get the extended right leg. So anytime I see something like that, I do think it's reasonable that gold could backtest the neckline right here, where if you got this price down to this range, we can map this trade out if you wanted to. Your risk reward is probably the give of 1800. Well, even then you have some pretty decent support. So looking at $56 risk, give or take. So you can run that back up to, a 2-to-1 risk reward puts you back up right around this range, where it's very possible that that could be playing the cards. But then I also do think that there is some sort of uptrend that could be building right here. So if this were to catch a bid, I'd say your breakout price is early signs of a break to get back over 2K. You do have some previous lows that you're going to have to fight through, which is kind of right around this breakout price. So if the price of gold were to get up to here, I think a lot of gold companies would benefit from that. And that is why Barrick Gold is, if it just traded sideways, the gold index, of course, and then Barrick Gold were to show weakness down in the here and gold catches a bid, I'd have a hard time thinking that Barrick Gold wouldn't catch a bid off of some of these support levels right here. So that's what we're seeing. From a more long-term perspective, I would say you probably have some sort of uptrend right here, which is what we had marked before, and you also have a wedge pattern sort of like that if you wanted to be safe. So down near the bottom of this, if it were to get down to these gaps, I think it's reasonable for a 20%, over 20% potential on this, where this uptrend right here also meets some sort of ascending channel, where if you were lucky to get a move like that and the price of gold got down to like 14s and you were able to get a move up to the top end of the channel, potential move 150%. So Barrick Gold catches the list for Reliable Rudy on Juneteenth. Next company, ABEV, more pricey, of course. But I do think that you could have some sort of uptrend right here. Now this has kind of been getting hammered, and this is what kind of the looks that you're going to get when you're searching for weakness. As in, I did like this little volume increase, which is why I said it, but I do think you're early to the party. You're going to have some sort of downtrend that you're meeting. Well, that means that you could also catch a bid if it got over like got over like 140s. I don't know. It's kind of tough to say, but is this some sort of long-winded descending channel, sort of like that, where if this pulled back into like 120s and then kind of just kept following this, just marking this kind of shelf of support right here, maybe this is going to take a long time to play out. But I do think that this is a fundamentally sound company. Uh, you're going to have a dividend coming up, or there are going to be buyers coming into this before the dividend. From the gap down the earnings, they had some write-offs, and it hurt their overall gap EPS, but still very high margin company. And high margin companies are always going to attract me, especially if they're also profitable. But then I do think it's reasonable to mark these tops. So, if it were to get in down to like these 120s, dating over to like January, I do think this one is worthy of keeping on watch. And if it came all the way down into like this neckline, this is really good support off of 100 flat. This is a company to keep on watch, in my opinion. If I was marking some sort of uptrend, you could maybe see the catalyst where this needs to trade all the way sideways for a long period of time. Who knows? But in terms of just Tuesday's trading day, I don't think this is one that you'd really need to watch. But I would want to see if this pulled back like the next few weeks or months down into like these mid 120s. I do think that it's a reasonable company to keep your eye on. So not really a play for next week, but I did kind of like the chart setup that I had. The next one we got is CVS. Let's just clear the chart. Another example of a company that's been getting beaten down pretty good. You have a pretty solidified descending channel right here. Does it need to trade sideways for a little bit? Now, another reason is uh, this gap down. If it just trades sideways and holds this support, I do think this is a reasonable company to kind of break this descending channel. Pretty solid financials, a solid dividend that they can cover. And they're bringing in a lot of profitability and still holding a lot of growth, and they're buying back a lot of shares too. So that is always going to attract me. The other thing that attracts me is this sort of, as soon as we broke this high, I'm just going to mark this right here. See how we hold when we break this right here? I'm looking at this as a potential, builds a neckline, it double tops. Oops, let's cancel that. It double tops, you hold a higher low, something like that. You hold a higher low, and then you get your extended right leg. Extended right leg, one day we're looking for a back test of this neckline, or this is where we're at right now. And we've had this tight descending channel all the ways down to it. Can it catch a bid off of this neckline where I think it's reasonable? Hey, you could at least potentially get this gap filled at 72 for early outs. And here's our neckline. So if you took the trade off that neckline, 7%, and this top end, which was resistance, 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 14.5%. I think it's reasonable. Drift, how we doing, man? Yeah, a little bit different of a stock prep. So yesterday was more of the unprofitable, looking for strength, looking for plays that, I think are reasonable plays for next week. And then this live stream is more of profitable companies trying to find more names that are on the weak side. As you can see, this is more of a weakness name, and you can see the chart tells it. But I do think this is a fundamentally sound company. Now, I'll use CVS for an example of kind of what I'm looking for. So I got CVS pulled up right here. Obviously, with any company, you should know what they do. They're in the healthcare space, a lot of employees, so keep that in mind. That's going but you can see the margins, the net margins, not really the greatest, but solid growth out this. Now, relating to some of the COVID plays, obviously healthcare caught a bid based off of COVID. But looking at just the quarterly, they're still putting up very consistent growth. You look at the annual growing, obviously from here to here. Is this COVID related from 2019 in 2019? I don't know. I haven't gone that far into depths with stuff. But from their dilution in 2019, so they diluted a lot of shares right here. I'm sure this was acquisition based. So if I go to the cash flow statements, I can see acquisitions. 2018, huge acquisition. So that is probably what that share dilution came from. Now, a few smaller acquisitions, okay, but has enough time passed. Now, looking at the income statement, another thing I want to see the shares. So let's see these last couple quarters. Last quarter, starting to buy back a lot more shares. Now, they weren't really buying a ton of shares through all those previous quarters. Well, what did the stock price do? They weren't buying shares up here, but now they're starting to buy back more shares. Is this so? I'm more confident that I got that buyer on my side, and it just so happened we're trading right at a neckline. Uh, Strength is fair, not super negative, so not like way down in the oversold area. And I think it's reasonable that if I pulled this up and focus more on this, on the commodity, you could have early signs of some sort of uptrend. Well, on the chart, I'm not seeing an uptrend. So for this to catch a bid and get a positive break, I think it would need to get over top of 73, give or take. And if we get that positive break from right here just to our breakout at 73, we're talking about 8%. So I do think it's a fundamentally sound company. Well, I'm not really done with my analysis. I want to see those margins. Not a high margin company. More in that retail space, but they are profitable. They are starting to buy back shares. Now, in terms of debt, long-term liabilities, 92 billion. That is a lot of long-term liabilities. So I want to make sure that cash flow can kind of cover that. Well, we look at the cash flow. We're on quarterly. If we go to looking around 13 billion, they've averaged that about, we'll say 10 billion in free cash. So it's going to take them how many years to cover off all their long-term liabilities? Around 9 years. So if I'm looking at something for a true long-term play, I'd like to see better margins, of course. But I'd also want their free cash flow to cover their long-term debt in around that 4 to 6 years. I'd feel a lot more confident with. So I do think it's possible that this could catch a bid more to the downside. If it did catch a bid to the downside, I would say, 60 flat right off of these highs right here. I'm sure you have a gap meeting in with that. So if I'm wrong at this first neckline, you do have a gap fill right there, and you have a gap fill right there, and another gap right there, another gap right there. So a lot of areas where this could be a potential play from like 60 to 55 if this downtrend stayed true. So if we were talking stay true to the downtrend, maybe this is a play in August. But I do think that this is a decent company with a solid dividend. 60 cents, so we're looking at around 3.7% dividend right now. I think it's a reasonable play to keep on watch. So that is why that makes the list for some stock market prep on weaker names. So moving forward, I'm sorry if I got a little short-winded there, or long-winded, I meant. What did I need to go to? Yeah, so next name we're going to look at is a tobacco name. We're looking at Altria Group, and I would say BTI is reasonable in that as well. And I just look at this as I think this is some sort of uptrend that could be legit. Now, I'm not a fan of buying the frowny face, and this is a position that I do hold, but you do have some good support right in these low 40s, and even below that support you have your uptrend, which is 42s, and you probably have some good support built in right here as well. So does this catch a bid off this uptrend, and then your breakout price is going to be right around a 48. So if we're talking about that 42 breakout price at 48, is this going to be some sort of ascending channel? If it is an ascending channel, down here near the bottom, that's pretty good risk reward for a high dividend company. Now I would say in looking at financials, I would like this one a lot more than CVS, and the main reason is look at the income statement. High, solid gross margin, operating margins, fantastic profit margins, free cash flow margins, fantastic margins. Looking at the growth, you're getting negative growth. Now that doesn't mean that there isn't money to be made. You go look at the cash flow statement, consistently bringing in about 8 billion in cash flow every single year. And we go look back at the income statement, the shares outstanding, consistently buying back shares, decreasing the piece of the pie, increasing your ownership if you're looking to go long, and looking at some of the debt, long-term liabilities of about 32 billion. So I know they're bringing in about 8 billion in free cash flow every single year. So it's going to take them about 4 years to cover their long-term liabilities. Now with high margin, every dollar that they bring in, they're paying their expenses off more and more the higher that margin is. But they do have some acquisitions. They're selling off the parts of their. They're selling off divisions, and I think they had something that they announced in April. So we're going to see that come up on their next income statement. So that is something to keep in mind, that anytime you're dealing with acquisitions, that potentially has to do with more share dilution, and also what type of company are they bringing into their business as well. But I do think that the chart setup for Altria Group is reasonable, and if it caught a bid, and we're talking about this up here, up at 60s in a half year from now, I think it's reasonable to keep this on watch. You're out probably the trend line or these lows where you could see a pullback down to this support in mid 30s. I think this is a no-brainer in mid 30s. And while we're talking about Altria Group, I think it's reasonable to bring up BTI, because I do like this support on BTI down in these low 30s. I've talked about BTI a lot. High dividend. They're not really buying back shares, but I like BTI more than Altieri Group, just not the chart setup. If we go over to annual, consistent growth. Now, they had a big acquisition in 2018. Consistent revenue, not the highest growing revenue, but shares they haven't been issuing or buying back shares, but high margin, high operating margin, high profit and free cash flow margin. I like those high margin businesses, and if I can get that consistency, we go look at their long-term liabilities. Total long-term liabilities, call it 60 billion. We go look at the cash flow, bringing in you can count on about 10 billion in free cash flow every single year. Well, it is growing a little bit. So about 6 years to cover their long-term liabilities. I think it's a no-brainer play. Here's the big acquisition that they made, and year after year they're also selling off divisions, which is helping that margin and helping that. But also looking at the return on invested capital, this is going to help boost that EPS, and which is going to help cover that for a 8% dividend. 8.5% dividend to only cover up 83% of their cash flow. I think that's reasonable. I'd actually rather them cut that dividend just a little bit, make it like 5% dividend, and buy back some shares while your share price is cheap. If they're instead of paying that high dividend, if they're buying back shares, there'd be a lot less total shares outstanding, and the share price would more than likely be higher if it's valued the same. So that's kind of what we're looking at there. But I do think BTI is reasonable down in these low 30s, and I think it's a weak name to keep on watch. Moving forward, from here on out, it's more charting plays that I'm going to be focused on in this next week. And starting with Kellogg, a weaker name, paid a dividend, but I do think this is a solid uptrend that it's been on. Let's go to a weekly chart. You can see this uptrend started back in 1986, and it has been holding pretty strong. And here we are in 2023. Are we going to be setting a double bottom off of this trend line? I'm sure there's multiple ways you can put this trend line, but I mean, that's as good as it gets right there. Is this trend line going to hold? And you can see the last 2 weeks we've wicked down into that price. Potential double bottom also coming in off of the commodity. Good volume on this move up, good volume on this move up. Now, is this going to eventually be a sort of a breakout price at 71 where we can get back up to, you have a shelf at 75 that you could reasonably get to. So if we're talking about this down off of this support level, 64, that was beautiful. Look at that wick right into that. If you can get it off of this 12% to the breakout price, 16% to some resistance, and maybe you can get an even higher price. Maybe this builds a U-shape up to the all-time high price. I'm not sure. But I do think Kellogg is a reasonable chart setup, and one that I'm probably going to be watching on Tuesday. If this caught a bid and got over like 67, that could be early entries. But still a little bit weak, and we have a little bit of time before that dip or before that earnings, so a little comfort zone there as well. Moving forward, we're going to a bank, and I think KeyCorp. This is a very solid setup on KeyCorp. You have a tight descending channel, but these 3 points of contact getting very close to that positive strength. Some of these bank setups, this has been a pretty key support level. If we go back to a weekly, I'm sure I will be able to find that. Resting off of these highs, is there something here that we can take advantage of? Rejects it, breaks it, holds. If this were to hold, I think it's reasonable. You could catch a bid up to this gap, which meets up with these lows. It meets up pretty good with those lows. We're talking about a 50% from current price. I think it's reasonable for it to get that. Now, some of the banking could be a little bit touchy, but I also think you could potentially have a downtrend meeting up from there as well, where from current price down to that up to that downtrend. That's a pretty good return. So KeyCorp is going to be on watch. They just got done paying a dividend, but I do think that this uptrend could be legit. If it claimed 10, if it got back over 10, I think this could catch a bid. Let's see it break this sort of tight channel right here, give or take, like that. And let's see it kind of break that downtrend and catch a bid. Where I would say this is the price it's rejecting. You can mark these lows. It rejects it, rejects it. You could respect 11. So if you got in on a 10 break, running it up to that 11%, that's a reasonable trade in my opinion. And you would also begin a positive break around that area. So even if it got through these 11s, you respect it and hold a piece. You know, I think you could run this up to the top end of this. Couple outs into that resistance as well. So from current price, you know, 13%, 25%, 30% to start that gap. It looks pretty good. So KeyCorp is going to be on watch for me tomorrow for sure. Now, this one's probably not going to be a big one that you guys are going to watch, but Dish Network. Dish Network. This company has been getting absolutely hammered. But the reason why it popped up on my scanner, one, they're still profitable. They're still putting up EPS. Now it's decreased quite a bit year over year. Year over year from 68 cents a share to 34 cents a share. But this volume that came in right at this support level, and I'm going to show you guys something. This support right here, I would say is going to be your out. This wick, it gaps up. Now, if you'd bought this gap right here, if this were to catch a bid right from the gap, 18% to that gap. It's reasonable. Now, if you wanted to run this to the top end of the channel, 43%. But this volume, when I see stuff like this, right at a solid support level where you got to go back. You got to go back to the year 2000 before we're trading around this range, and I would say you also have pretty good support off of 450, which is those highs from IPO. So if this wanted to trade in this channel and came down to like 450s, I think there could be something here. Just maybe. You know, I'd say 350s. Can it break this downtrend though? If this caught a bid, this thing is going to rip, in my opinion. So Dish is going to be on watch. Next we have XLE Oil Fund. And nothing's really changed with this. We know that we have this sort of wedge pattern, sort of like that. But I think this is a reasonable fund. Solid dividend. Solid payout ratio on that dividend. Can oil catch a bid? If oil catches a bid, people are going to regret not building a position in XLE, in my opinion. This is a solid ETF to keep on watch, my opinion, of course. But looking at the daily, if it rolled over and came down to this 77.50 gap, I'm going to be a buyer right here. And I think it is actually going to roll over, but strength is very close. This could easily catch a bid, go fill this gap, and then trade back down to here. If you're lucky, you get the full breakout through that, and your breakout price is going to be around an 88. So talking about it from right here, your breakout price is about 8% away. Catalysts maybe run up to the all-time highs again in the low 90s. I think XLE should be on watch. And the last one we have on watch for today is Enphase Energy. We've talked about Enphase before. This channel started in 2020, runs up to the channel, back to the bottom. Very solid looking channel. I don't know if I'm going to get this as lucky as I thought I was over here. When I started this position in the 160s, very, very small size, just because it was showing that we're catching a bid. Now if this pulled back in, I'm a buyer. I'm a buyer off this trend line. And if it breaks down, it breaks down on me. But this is a big compounder right here. Let's look at their projected numbers of 730 million. We go back to last year of 530 million. Every single quarter. Last quarter they put up 726. We go back 4 quarters, 441, and profitable. Uh, Decent margins. There is some share dilution, but are they going to be diluting down here? It makes sense to be diluting shares for a newer company. Not the most new company, but started back in 2012, still fairly new. If this trend line gave up, maybe pull back to these previous highs at 78, or maybe the support range right here. So I'd say you do have some downside risk with this, but if this catches a bid off of, let's say, trade sideways for a while, that's pretty good risk reward for a high margin, compounding quarter after quarter company. I think Enphase should be on watch, but going more into depths, we'll take that channel out and we're just going to focus on some technicals. This could have been looked at as a neckline. Now you break it with green engulfing, you have buyers. It never retraces down to this gap, so I think that 165 should be marked. If it got down to 165, I'd say this could be a tight descending channel, where we could be talking about this early July over here. But if this got over top of this price and started filling this gap, and why is this price so crucial is because here's your previous lows. This is what we can't get over right here. If it got over top of those lows, I wouldn't be surprised to see this make a run for the gap, which sitting up at 220, we're talking about it down here at 180s, maybe a pullback buy into the top of this neckline at 172. This is a reasonable setup. So Enphase is also on the list. And that is all we got for the scans that we did, scanning for weakness. Now this one wasn't scanned for weakness, this is one that I just caught off of my watch list. But I do think there is also a descending channel that should be talked about as well. So if this descending channel wants to continue respecting it, I'd say maybe even a wedge pattern, but just marking out a parallel channel, I would say, it makes sense that if it did break support, if we just mark these lows, we could be talking about this down at 115 if it continues following this channel to the downside. But silver names have been getting beat up, and I think this is a reasonable company that you could be thinking along on, just because, looking back to the last time it was at that 115, we're going to this earnings report, 178 million, almost 30 cents in profit per share. They've quadrupled for their projected earnings, of course. They've quadrupled in EPS, and where were we? We were right here, and quadrupled almost in revenue as well. So a couple different setups that we're looking at there. But other than that, that is everything that we're looking at. I'll give you guys a little bit of time to ask any questions in the chat. And other than that, we're just going to be prepared to go crazy when the stock market opens tomorrow. Before we go, we can go take a look back at oil, and we can see oil still kind of holding this uptrend. Indecision candle, but it did take out this sort of neckline, and it's actually flirting to kind of break that uptrend right now. Also on a 15-minute, maybe getting a positive break, but you still got to fight through these lows right here. So maybe this channel should be set more so like that. Which I'd say that's reasonable right there. So I'd still say kind of a bearish little setup right here, but also off the potential uptrend that's trying to hold. Yeah, oil's gonna take some time probably, but I do think the setups are there. But other than that, that is gonna call it for the live stream. I appreciate anybody who tuned in. Drift, always loyal. Love Drift. Appreciate you for tuning in, man. But we'll see you guys tomorrow for the live stream of the stock market.